Real estate has long been considered a safe haven against inflation. This belief stems from the idea that property values generally appreciate over time, providing a buffer against the eroding effects of inflation on purchasing power. Property values tend to rise over time, often keeping pace with or even outstripping inflation. Historical data supports this trend, showing that real estate can be a reliable store of value, especially during periods of economic instability. However, 2024 presents a unique set of challenges for those seeking to invest in real estate. The economic landscape is more complex than ever, with various factors influencing the market in unpredictable ways. With inflation running high, this is impacting affordability and market dynamics. Rising prices mean that fewer people can afford to buy homes, which in turn affects demand and can lead to a slowdown in the market. Investing in tangible assets like real estate can be a good strategy, as it helps preserve wealth during periods of inflation. Tangible assets are less susceptible to the volatility that can plague financial markets, making them a safer bet for long-term investment. Nonetheless, it is crucial to understand the nuances of the current market. Factors such as interest rates, government policies, and global economic conditions all play a role in shaping the real estate landscape. Informed decisions are key to success. Investors need to stay updated with the latest market trends and data to make educated choices. This involves not just looking at property prices, but also understanding the broader economic indicators that can affect the market. Prudent investors must carefully analyze market trends and factor in inflation's impact on financing costs. Higher inflation often leads to higher interest rates, which can increase the cost of borrowing and affect the overall return on investment. The year 2024 requires a cautious yet optimistic approach. While the challenges are significant, there are also opportunities for those who are well prepared and willing to adapt to changing conditions. Understanding the forces at play is essential, true for both seasoned investors and first-time homebuyers. Knowledge is power, and in a volatile market, being well-informed can make all the difference. This essay will delve into the intricacies of inflation and explore its impact on the real estate market. We will examine historical trends, current data, and expert opinions to provide a comprehensive overview of what to expect in the coming years. Whether you're a seasoned investor or a first-time homebuyer, understanding these dynamics is crucial for making informed decisions and safeguarding your investments. Inflation, simply put, is a rise in prices, meaning the purchasing power of your money decreases. What you could buy for $100 last year might cost you $105 this year. This means your money buys less, eroding savings and impacting investment returns. There are many causes of inflation, including supply chain disruptions, increased demand, and government policies. Understanding the root causes of inflation is complex, however. Its effects are universally felt. Everyone from consumers to businesses feels the pinch. Inflation isn't always a bad thing. A small amount of inflation is considered healthy, as it indicates a growing economy. However, high or unpredictable inflation can destabilize economies and make planning for the future difficult. One of the most direct impacts of inflation is on home prices. When the cost of goods and services rises, so does the cost of building materials, which in turn increases the cost of constructing new homes. The result? Higher prices for buyers. Furthermore, existing homeowners often raise asking prices to keep pace with inflation and maintain the value of their assets. This creates a competitive market where buyers may find themselves engaging in bidding wars, often paying above the asking price. The combination of these factors contributes to a surge in home prices, making affordability a significant concern, especially for first-time buyers. The dream of homeownership might feel out of reach in many markets across the country. Renters are not immune to the effects of inflation. In fact, they often feel the impact most acutely. Landlords facing increased costs often pass these on to their tenants through rent increases, especially in areas with strong rental demand. As homeownership becomes less attainable, the demand for rentals increases, further empowering landlords to raise rents to match the market. This creates a cycle that is difficult to break. The rental market in 2024 is a challenging landscape where renters face limited options and rising costs. This adds to the financial strain, making it harder to save for a down payment, especially for those hoping to transition from renting to owning. Section 5. Climbing the rate ladder. Mortgages and inflation. Inflation also has a significant impact on mortgage rates. The Federal Reserve typically raises interest rates to combat inflation. This directly affects mortgage rates, leading to higher borrowing costs for borrowers. Higher mortgage rates mean higher monthly payments, which can impact affordability. As a result, potential homebuyers might qualify for smaller loans, limiting their options in a competitive market. The interplay between inflation and mortgage rates is complex and significantly impacts the real estate market. Understanding these dynamics is crucial for both buyers and sellers, as it helps them make informed decisions in a fluctuating market. Section 6. Investing wisely strategies for a turbulent market. Despite the challenges, there are still opportunities for real estate investment in 2024. However, a cautious and strategic approach is paramount. Here are some key strategies to consider. Focus on cash flow. Properties with strong rental yields can provide a hedge against inflation, as rental income can offset rising costs. Consider value-add opportunities. Properties in need of renovation offer the potential for increased value through improvements that can command higher rents or sale prices. And remember, real estate is a long-term investment. Ride out short-term fluctuations and focus on the long-term growth potential. Investing in a high-inflation environment requires careful planning, thorough market research, and seeking advice from experienced real estate professionals is also crucial. Section 7. Location, inflation, and real estate values. The impact of inflation on real estate values is not uniform. Location plays a crucial role. Some areas are more resilient to economic downturns. They might even see property values appreciate despite inflationary pressures. Factors to consider include job market. Areas with strong job growth and diverse industries tend to be more resilient. Population growth. Growing populations create demand for housing. This supports property values. Infrastructure and amenities. Access to transportation, schools, and other amenities enhances desirability. Understanding local market dynamics is essential. It helps investors make informed decisions. Choosing the right location can mitigate risks. It can lead to greater returns in the long run. Section 8. The silver lining. Opportunities amidst uncertainty. While inflation presents challenges, it also creates opportunities. Sellers might find themselves in a strong position. They can capitalize on high demand and rising prices. For buyers, periods of economic uncertainty can present unique opportunities. Motivated sellers might be more open to negotiation. This could lead to favorable deals. It's important to remember that real estate is cyclical. Periods of high inflation are typically followed by periods of slower growth. This is a natural economic cycle. Patience and a long-term perspective are key. Section 9. Expert advice. Navigating the real estate maze in 2024. Navigating the real estate market in 2024 requires careful consideration and expert guidance. Consulting with experienced professionals is crucial. Seek advice from real estate agents, local market experts who can provide insights into pricing trends and inventory levels, mortgage brokers, professionals who can help secure the best possible financing options, financial advisors, experts who can offer personalized investment strategies based on individual financial goals. Seeking professional advice can provide valuable insights. It helps mitigate risks. Making informed decisions is crucial in a complex market. Section 10. Weathering the storm. Real estate's resilience. The real estate market is not immune to economic storms. However, it has historically proven to be a resilient asset class. While inflation presents challenges, it also creates opportunities. By understanding the forces at play and adopting a strategic approach, investors and homeowners can navigate the market effectively. Remember to stay informed. Keep abreast of market trends, interest rate movements, and inflation data. Seek expert advice. Consult with professionals to make informed decisions. Maintain a long-term perspective. Real estate is a long-term investment. Don't let short-term fluctuations derail your goals. While the future may seem uncertain, remember that real estate has weathered many storms before. By embracing knowledge and seeking expert guidance, you can navigate the market with confidence.